Good morning, subscribers. Welcome to the daily pre-market analysis. I am Brijesh Bhatia. SGX Nifty is indicating a negative opening of around 35 points. It's still trading at 17,192. Yesterday we discussed this SGX Nifty chart as well, where the 50 EMA is acting as a resistance zone over here. We saw a recoverable move even after a negative opening in the yesterday's morning. SGX also indicated a recovery towards 17,228 close. Even in today's session, it tried to manage to move above 50 exponential, but yes, it's just a start of the day. We may see a momentum coming up in the during the day, but yes, 50 acting as a resistance zone. If I look at the Nifty chart yesterday, after opening a gap down, nearly 70,314 was the Friday's close. We opened back at around 70,094, low of around 70,065. And back towards 70,280 was a sharp move during the day, and this indicates that the India is outperforming by a big margin against the Dow Jones. So even Dow Jones on Friday ended on a big negative note. In the yesterday's session on Monday, it ended on a negative note with around 100 points down, nearly 0.3-0.4% down. And look at the momentum on the Nifty. We saw a sharp recovery after a gap down by a huge margin. So the momentum is still over here into the bulls side. 50 daily EMA would be a resistance zone as of now. I believe 17,280, 17,270 may act as a resistance zone in today's session. And if you look at the previous high of 17,337, where the bearish candlestick structure, an evening star has been formed, to negate that, we need to move over 17,428. So over here, a big hurdle, 17,300 and 17,428 may could be expected in this week. What are the levels one should look for in today's session? So if I just go on to the hourly chart, look at this bullish candle, 17,117, the low. Even after the bearish structure with the 115 to 215 candle yesterday, look at the momentum which came back in the last hour. 215 to 315 bullish candle was a sharp recoverable, which means that the bulls are still holding the momentum. So I believe this low of 70,140, 70,156 in intraday could be a good entry level for bulls, keeping a stop loss of slightly below 17,065, which was yesterday's low. I believe one can look for a 17,250 to 70 on the upside target. So look an entry in case we dip towards 17,140, 130 levels, keeping a stop loss of 17,065 and upside levels of around 17,280, 270 would be a good intraday profit booking momentum. In case we don't touch that level and move higher, I will wait for a break of 17,337, which was the Friday's high. And in case we sustain above that, I think the momentum could see 17,500 as well in the coming days. Coming on to the Bank Nifty over here, the similar structure even after opening the gap down, and if you remember, I indicated 38,500 in yesterday's session could be a good support area, and exactly it has played the gap area over here. Yeah. So if you look at the gap area which I have highlighted, 38,500, 38,300 could be the good area. Keeping a stop loss of below 38,300, I have 38,280, 290. I have indicated that we may see a reversal, and exactly that what happened. 38,518 a low, and we moved to 39,315, which is a nearly 800 points up move. So keep a watch on these. Again, in case we test, if we look at, I think now the new support area will be 38,800. So in case we open at around 39,000, 38,900, 38,800, look for an entry bias. 38,500 will be a stop loss now. And I believe 39,300, 39,400 can be expected in today's session as a target level where you should book profits onto the Bank Nifty. One index I want to highlight over here is, which was the only index in yesterday's session, positive side, was IT index. With a gain of nearly 1% in yesterday's session. Look at this candle over here. After a huge gap down, so we ended on a Friday at around 27,733. We opened right at around 27,200, which was nearly 500 points down. And look at the recovery it has shown. Fast and furious, which has been at 1, 2, 3, nearly a few days of high. So last was 15th September and we are at 11th October. So nearly 25 days of high. Look at the momentum it has shown over here. So I believe IT is keeping wolves into the game over here. The only risk I believe, as it is a follower of Nasdaq. So if I just look at the Nasdaq chart over here, yesterday it has hit a new low, and this low was seen right in September 2020. So nearly 2 years, over 2 years of low has been seen onto the Nasdaq. Again, there is a corporate action of Infi buyback coming up, and that's the thing which is keeping IT index on the higher levels. But most of the stocks are participating on the bullish side. But yes, the risk over here is in Nasdaq for IT stocks. So keep a watch on this threat of Nasdaq for the IT index if you are looking for a short-term bias. But I believe yes, the momentum in the yesterday session was very encouraging for IT traders. And I believe the momentum could prolong over here toward 28,500, 28,600 levels onto the higher side. I'm not looking for a major trend change coming into the IT stock, but yes, that could be a short-term play if you want to look for 3 to 4% onto the upside, where you can gain a momentum onto the stock side. So keep a watch on this IT space. Purely from a trading person, I'm not looking for an investment as of now onto the IT space, but from a trading person, yes, you can look for a long bias, keeping till any dip over 27,600, 27,700. Stop loss would be 27,200 level, which was yesterday's low, and look for a higher level of 28,500, 28,700 onto as a target onto the IT index. And again, I'm trading. This is a purely a trading play. I'm not looking for an investor trend change. Though if you look at the longer play over here, the momentum has been a consolidation zone into the bearish side. So I'll wait for a structural move, things to happen as a bullish side for investor. But as of now, I think trading aside, a good play can be on cards. So signing off and have a profitable day.